Let's take a look at problem 5-20A, where we're going to explore cost behavior and use the high-low method contribution format income statement. Compañía Marítima S.A. of Santiago de Chile is a merchandising company that supplies a variety of American products to the Chilean market. The company's income statements for the three most recent months appear on the screen you see. Let me slide down. Requirement 1 says, identify each of the company's expenses, including cost of goods sold, as either a variable, a fixed, or a mixed cost. Okay, let me see if I can slide over where we can work with this. Okay, now I've slid over just to the right of the information, and you see on this green shaded area I've laid out the sales in units that were provided for months, for each month, for April, May, and June. You can see I've dropped in the numbers. And then we're going to explore what those various expenses were. Now, cost of goods sold for April was $78,000. And for May, it was $88,800. And for June, it was $84,000. Now, what we see is the cost per unit is exactly the same regardless of the sales units. And we see that we've got an increasing line on the graph. The cost per unit is $12, so if we use the formula y equals mx plus b, which is how we would graph a line, where m would be the slope of the line and b is the y-intercept, the slope of the line actually is the variable cost. And since there's no component b on this equation, because it always came out to be $12 times the sales units, we know that cost of goods sold is a variable cost. The easier way to, or the more simpler way, is to just look at the cost per goods sold. If it doesn't change, it's a variable cost, 100% variable. Okay, next we want to look at the next item down, which I believe is advertising. And advertising was $5,000 a month, regardless of the level of activity. So I'm going to copy this here. And we have a straight line, and now we see the cost per unit definitely varies. Because we've got a straight line, we're able to say that the dependent variable is equal to 5,000 regardless of what happens. Whenever we have a straight line graphed, we know that's a fixed cost. Alright, the next unit is salaries and commissions, and salaries and commissions were $30,800, then $34,400, and then $32,800. So now what we see is cost per unit is $474, 4.65, and 4.69. Since it's not exactly the same, and yet we know there seems to be some positive relationship. We know that we've got a mixed cost, and sure enough on the graph we see that the relationship turns out to be a y equals 4x plus 4,800. Now how I'm doing that is I'm actually using linear regression, which is beyond what we're going to try to solve in this problem, and Excel is calculating what that equation of the line would be for us. So I'm using this just as a visual aid to show us what the line would look like. It certainly looks like a variable cost, but it's not 100% variable, because if it was 100% variable, the cost per unit that you see here would all be the same number. So shipping costs are a mixed cost. The next item is insurance. Insurance is $4,000 in every period. So again, we're going to get that straight line graphed. Cost per unit is going to vary, but since the dollar amount's exactly the same, we know that's a fixed cost. Depreciation behaves the same way at $2,500. we're going to get a straight line again. The cost per unit changes, but graphed it's a straight line. Total costs are always the same. That's a fixed cost. And I think that's all of the costs. No, I missed the salaries and commissions. So salaries and commissions during the month of April was 30,800, then 34,400, and then 32,800. Or maybe I did work this one and labeled it as something else, because that sure looks familiar. So we wind up with a cost per unit that varies, but it's a mixed cost because it's not the exact same cost per unit. The other way we know that is if you were to draw this line and carry it all the way to the y-axis, it would cross the line right there at $4,800. And let me go over shipping costs again in case I missed that. 67,500, 75,600, and 72,000. I got to get it in right. And shipping costs, look at that. It looks like it will cross the line at $9,000. But it certainly looks variable. But since it's not exact, again, with cost per unit, it's a mixed cost. Okay, so on the screen now you see which costs were variable, which were fixed, which one were mixed, and the salaries had a commission, so it included commissions, and it was a mixed cost. Insurance and depreciation were fixed. Okay, now I've slid over to another part of the screen here so that we can see requirement 2. And requirement 2 says, using the high-low method, separate each mixed expense into variable and fixed elements. State the cost formula for each mixed expense. So the variable cost, we knew the mixed cost were shipping and salaries and commissions. So let's take a look at the high-low method and see how we solve that. Okay, now I slid off just to the right of where we were to see how we tackle requirement 2. First off, here's our variable and our fixed costs that we calculated above. And now what we're going to do is we're going to pick the high activity and the low activity and compute the change. So the high activity occurred when sales were at 7,400 units, and the low activity occurred when sales were at 6,500 units. Now the key here is to pick the independent variable. In this case, it's selling units. But you don't want to pick the dependent variable. You don't want to make that mistake. You want to pick the independent variable. And then you jot down the high and low units for the mixed costs that we're trying to separate into fixed and variable components. So with shipping, it's 7,400 units. We had $75,600. That was given in the problem. Salaries and commissions were 34,400. The low activity, and that's where we were at 6,500 units. Shipping was 67,500, and sales commissions was 30,800. Okay, then we compute the change. So we just subtract the low from the high. Subtract the low from the high, and here we're subtracting again. Okay, so we're subtracting, and that's from cell N48 minus N49. Okay, then to determine the variable cost, we take the change in the cost, which is the rise over the run. The cost is the dependent variable divided by the change in the activity. And the rise appears on the y-axis, the activity appears on the x-axis. So we're calculating variable cost as the rise over the run, which is the change in the cost dollars divided by the change in activity. So if I do that, I take M50 divided by L50, or $8,100 divided by 900 units. That's our variable shipping cost per unit. Then we do the same thing with salaries and commissions. We take the 3,600 change divided by the change in units, and I come up with $4 variable selling and commission per unit. All right, then to determine the fixed cost, go back to the high level and jot in what those amounts were. 75,600, right, which we got from right above, and 66,000 was the is the variable cost we've calculated above at the high level. How do we come up with that? We take the 7,400 units times the variable cost that we've just calculated. And so therefore we know that of that 75,600, based on the high-low method, 66,600 was due to variable costs, so the balance, $9,000, must have been due to fixed cost. We do the same thing with sales and commissions. We knew the total amount at the high level was 34,400, right? We pulled from there. The information was provided. And then we multiply our $4 variable cost that we just calculated times the number of units at that high level to come up the variable cost element, or the component of total cost that's due to variable cost. It's 29,600. So the fixed cost is what remains, which is 4,800. So when we put that into the formula of y equals mx plus b, or in this case y equals, they're using the symbol a P. I think that's the price per unit is what the P stands for. We get y equals, oh, I'm sorry, I think that's the dollar. The Chilean dollar is a P for peso. So y is equal to 9, I think it's pesos, but I'm going to call it dollars. 9 times the number of units we sell plus fixed cost of $9,000 Chilean dollars, and the sales and commissions were equal to 4 Chilean dollars times the number of units plus a fixed cost of 4,800 Chilean dollars. Okay, now I've moved over to show requirement 3, which says redo the company's income statement at the 7,000 unit level of activity using the contribution format. So we're going to figure out, what are sales less variable expenses to come up with contribution less fixed expenses, total fixed expenses, and come up with net operating unit. And I'll just slide this over, and you'll see elements of what we worked on before. In fact, let me slide that up so you can see where we had just worked the high-low method. But I still want to get it on the screen. Okay, so we had calculated $9 and $4 in our fixed cost to come up with the formulas. We all saw this before. And then down below is where we jot in what we know. Sales at 7,000 units would be equal to 7,000 times 40, right? The cost of goods sold is equal to $12 times 7,000 units. Shipping, the variable portion, is going to be equal to the $9, which we got right there, right? Because we calculated that times 7,000. And the salaries and commission is equal to 4 times 7,000. The 4 came from right there, the variable portion that we calculated. Actually, we calculated 9 in here from up here. Okay, so that gives us our total variable expenses. Subtract that from sales, we get contribution margin. And then we jot in the fixed expenses. Now the 5,000, the 4,000, the 2,500 we calculated earlier in this problem just because we saw no matter what the level of sales were, those dollar amounts remain the same, therefore they're fixed. But the shipping and salaries is that 9,000 and 4,800 that we calculated right here, and we jot them in. So in the case of shipping and salaries, they appear in both places because they're a mixed cost. A portion of the total cost are variable, a portion are fixed. So we jot in those fixed components, and when we're done, we're able to come up with total fixed cost and derive net operating income.